The market is at a critical juncture. We are currently observing high-frequency institutional footprints near the psychological round number of 80,300. Before we dive into the precise execution levels and technical breakdown, please watch the full video to understand the complete directional bias and structural shift. Understanding the underlying liquidity mapping is crucial for maintaining a professional directional bias in this volatile environment. Following a significant bullish break of structure, BOS, originating from the 78,000 demand base, BTCUSD has entered a premium pricing phase. We have identified a sharp expansion into a major intraday supply zone between 80,200 and 80,800. While the primary trend remains bullish, momentum is decelerating as price taps into the 81,200 and 82,500 institutional liquidity pockets. The current consolidation below resistance suggests a strategic pause before the next major volatility expansion occurs within this timeframe. Our main entry will be at this order block zone located between 79,000 and 79,400. We are currently waiting for mitigation of this specific demand cluster. Once the price retraces here and fills the remaining buy-side imbalance, we will begin building our position. This capital engagement zone represents the highest probability for a trend continuation move within this market structure and institutional flow. Entering at this level ensures we are aligning with institutional intent, rather than chasing the current expansion at premium highs. Maintaining strict risk parameters is essential. Our invalidation level will be strictly below the recent swing low at 78,800. If price breaks this, our bias changes, and we will shift our outlook toward the 74,800 to 75,500 swing demand area. Protecting capital remains our primary objective in every single trade we take during this phase. Adhering to these levels ensures that we remain objective and do not hold on to losing positions when the market structure shifts. We have mapped out 3 distinct targets for this rotation. Scenario 1 aligns with the 81,200 supply, while Scenario 2 targets the 82,500 threshold. Our final scenario or objective is to clear the liquidity zone at 83,000. Each of these targets represents a key area where we expect institutional profit-taking or trend reversal signs to emerge. This setup offers high-value rewards for those who remain patient. The current state of BTCUSD is a classic example of a trend testing its limits at a premium supply zone. By waiting for the pullback into the 79,000 demand area, we avoid the trap of buying at the top of a bullish expansion. The presence of multiple supply zones above 81,000 indicates that while the trend is strong, it will likely face heavy resistance before a clean breakout to new highs can be sustained. We will continue to monitor the lower timeframe structure for any signs of early reversal or distribution within the current consolidation range. Staying patient and waiting for our specific trade execution criteria to be met is what separates professional analysis from retail speculation. As the market develops, keep a close eye on the 79,000 support level, as it is the line in the sand for this immediate bullish idea. If the market continues to hold higher lows, the path toward 83,000 remains the path of least resistance. However, a failure at demand would signal a much deeper correction that could provide even better long-term entry opportunities. Institutional flow dictates that we must be reactive rather than predictive at these levels. The liquidity sweeps near 80,800 will determine if the next leg up is imminent, or if a deeper correction towards 75,500 is necessary to collect more buy-side liquidity. Watch for high-volume rejections at the supply zones mentioned earlier. Professional traders look for confluence. By identifying where retail stop losses are likely placed, institutions create liquidity sweeps to fuel their larger orders. This is why seeing price tap the 80,800 zone is significant. It is a high-probability reversal area where many early sellers might get trapped. Our goal is to wait for the market to reveal its hand at the 79,400 order block. If we see a strong bullish reaction there, it confirms that the big players are still interested in higher prices. Always remember that in the world of smart money concepts, we are looking for the path of least resistance. Currently, that path points upward, but we must respect the supply zones that have been established. Managing your risk and following the plan is more important than being right about every single move. Follow for more professional insights. The next analysis is coming very soon. This is an educational video, not investment advice.